seems to be taking a downward trend as investors are taking on the profits gained in the last couple of weeks. How long do you see this profit taking going?
Well, good afternoon to you, Terry. What happens is that if you look at the trend of the market, it started on a positive note, being that a lot of these retail investors have been waiting for a moment like this, because 2009 was a very downward trend kind of year for them. And now that the market has started showing signs of gaining in some of the counters, and especially Safaricom, you notice that most of these retail investors are looking to cash out now and wait for the next wave as it goes. So we could say it could take a week, it could take more, but also there's a positive outlook in terms of investors. There's a lot of good feeling and good things going out there. The economy in terms is showing, was given a good vote of thumbs in terms of that it will grow 3%. Then we look at an interest in especially foreign investors who also are driving the market. If you look at the trades that have taken place, foreign investors have also been a significant investor in the market. That has also given a lot of positive change. Then some of the steps that have been taken by the market itself in terms of regulation to ensure that you don't have incidences of collapsed stockbrokers are also now helping that trend for positive. But what I'd say is, I'd say give or take maybe about another week or two, and especially as you notice we're approaching the end of the month where there's a higher demand, especially for payments, utilities and the likes.
Now, the bourse's biggest company by market capitalization, Safaricom, has just announced that it may plan to introduce a dividend reinvestment plans that allows shareholders to turn their dividends into shares. How do you see investors taking on this news, and how do you see this impacting that particular stock?
I'd say it's a positive step in the right direction, because for one, if you have very minimal shares, it would come as a welcome approach that as opposed to getting your dividend check of 100 shillings, we would cost you maybe 2,000-3,000 bob to get that 100 shilling check. It would be more advisable to buy more stock. And in the long run, you look at it as a positive step, because if you join the company as a small-term investor, over the period of years, you end up realizing that slowly by slowly, you've ended up owning a substantial percent of the stock for that company. Then also from the side of Safaricom, it would minimize costs because there are costs involved in processing and ensuring that each and every shareholder gets their dividends. You notice that last year they ended up reintroducing the M-Pesa to cut off that issue of sending the check because that was going to be very cumbersome and also time consuming and the cost element. So I would say it's a positive step that if it's approved, because it's awaiting Capital Markets Authority approval and the rest, other companies may follow suit, especially companies that have very large shareholders in their books.
Of course, cashless dividends are quite a common practice in developed markets, and it would be an interesting thing to see that in our market. Now, Olympia Capital seems to have advanced to its highest level in more than 3 months, climbing 7.7% to settle at 7 shillings. That's, of course, after the announcement they made yesterday about higher profit within the first quarter of this year and also a possible re-entry into the South African market. What's your outlook for this company, and is this something that you're looking at as you get to buy?
Okay, I would say yes, because for one thing, Olympia Capital has done something that a lot of companies have not done. They admitted when they had problems, and they actually went back to the drawing board. And if you realize, they had actually ventured into the South African market, but certain factors tend to be too much competitive in terms of they had retailers who are dictating in terms of the supermarkets that you supply were actually dictating the market. So when that tended to be a bit difficult for them to penetrate the market. So what they did, and I was very impressed by that, is that they went back to the drawing board. They liquidated the company that they had actually taken, I think Plush, the company called Plush in South Africa. And now they've come back again into the market, this time around with a leaner, more efficient company, which now looks at being specific. They're now doing what is called like specific investing. And going by that, it also shows that when I, as an investor, look at something like that, it gives me a very good vote of confidence in the management, because it looks like this is a company that actually understands the market that they're in, and they're willing to take the risk or to take the gamble that, hey, this has failed, let's go back to the drawing board and look at a positive way of growing the company, the revenue. And this is what is happening. Hence that you can see already those who are looking at a long-term approach in terms of investing in the company are coming on board.
It will be interesting to see how Olympia Capital, of course, progresses. The PE still stands at -2.4, but definitely it is a stock to watch. We'll have to end